Hey guys, Uncle Dan. Finally got the oil tanker matrix done for this month. This took me a while. Some interesting numbers came out. Would you believe our top pick DHT is the only one that's made money so far this year? So, it's luck of the draw, really. Anything could happen. We're just lucky that the one we thought could possibly eke out a profit has done it so far. Big challenge for the oil tankers. So it is what it is, but we're sticking with it. It's just one small part of our portfolio. We stayed small. Hopefully you stayed small in there, but we're going to find a way to make money in here. One way or another, we're going to figure it out. So today we're going to look at DHT, EURN, who have already reported. DHT has actually made a profit. We're going to go through some interesting information in there, which I hope you'll find useful. If you have any comments or any questions, leave them down below. If you like what you see, remember to press the like button down below so that I know that you guys want me to continue covering these oil tankers. We just breached the 3,000 subs mark. Thanks for all your support. We'll see where we go in 2021. Okay, so we're going to cover three things in today's video. We're just going to quickly review comments from the last video. We're then going to look at some of the interesting information presented in the EURN quarterly report. And then we're going to focus in on the oil tanker matrix. We're going to see how the companies have performed, where they have delivered on freight rates based upon their forecasts that they've previously given us. And I've also updated the total number of ships and all the other relevant data in there. So there's a lot to cover in there, but we're just going to focus in on EURN and DHT today.
Okay guys, we're going to do our monthly oil tanker matrix update. I just wanted to go through the comments from the last one. So quite a few of you guys came back and said that you found the tanker matrix updates helpful in terms of the presentation and learning what's going on. So I'm going to go ahead and do this again this month. If you want me to keep doing it, then give it a thumbs up so I know that you guys are interested in this. Berg Bryce commented that he's holding DHT, EURN, Frontline, and TNK. So we're going to talk about DHT and EURN, DHT being our top pick, and then Frontline and TK tankers, they're going to be coming up next. They have not yet reported. So look, I'm here to help you guys, so I'm not going to abandon you on the tankers. I mean, you guys got me in these tankers anyway, so I got stock now in DHT, EURN, and NAT. So we're all in this together here. I'm still just holding shares in each one of those. I haven't rolled them into any options yet. But today we're going to talk about EURN. Okay, next, some of you have asked me to go through the investor presentations just to kind of give my insights into some of the comments. I'm going to go through the EURN presentation next. I'm just going to point out a few items that I think are interesting. Here's the seasonality of the tanker market structure. What's interesting here is they're suggesting that the best quarters are typically Q1 and Q4. And right now we're in Q1. The market's looking a little bit better than it was in Q4. This is the cyclical industry since 1990. It's the average time charter equivalent rate. And you can see that it's normally right around in here between 20 and 30. Occasionally we have some spikes. This has always intrigued me. I've always curious about like the cost of the tanker to ship the product. I've always wondered what proportion of the total cost in terms of the cargo value is the freight cost. And here's an interesting slide. The source is from Arctic. What they're telling you is that for the VLCC, it's about 3% of the cost of the cargo is the shipping cost. So that's pretty low. And they're telling you like propane, it's like 10%. And then iron ore, it's like 23%. So the cost of shipping crude is a relatively small cost. And this is where the trends have been. Demand is still bad. Supply is still low. The ton miles is growing, but OPEC production cuts are biting. Ton miles is shrinking because of the lack of supply. And so that trend has not gotten better, it's actually gotten worse. The vessel supply is still high, and there's not been the kind of scrapping that everyone was expecting. So this is an interesting one. Oil demand is highly correlated with GDP growth. The order book as a percent of fleets are 25-year lows. Now this comes back to this tanker super cycle that everyone was pitching before, which again, I told you all to just ignore that. This is just saying how the order book is really low and a lot of ships are aging. But this is a red herring. This isn't going to move the market. And people, they haven't, and a lot of these companies haven't even scrapped all these old tankers. So they're still delaying scrapping. This shows you how many are supposed to be recycled. If you look in the last couple years, there was supposed to be quite a few recycled. Look at 2020. They're not showing you what the recycle forecast was for 2020. They're just telling you only 2 got recycled. So here they're telling you 35, 23, 26. But in reality, are we going to see that many? I mean, right now in 2021, only 3 have been recycled. So at the rate we're going, there's no way we're going to have 35 recycled this year. So they're overplaying this hand here. There's not going to be as much recycling as they say there's going to be. This is an interesting slide. Younger tankers are able to command a higher rate because they run more efficiently. And you can see their consumption is only 60 tons. So there seems to be a lot of customers who are now focusing in on just how efficient these ships are running. And look at the rate being offered to more efficient tankers versus the older ones. That's a huge difference. And look, the older tankers consume up to 70 tons of fuel. Hopefully more of these will get scrapped, because it appears that people are not willing to pay for those. I would suspect that there's some public companies that are demanding a certain efficiency in their tankers that are being used. And look at this. The more efficient eco tankers are getting even a higher rate. And look at their consumption. It's lower. It's only 54 tons. So the newer ships and the more eco-friendly ships are able to get a higher price than the older ships. So we need to watch that. If we're holding on to a stock like NAT, which has a lot of the older tankers, no surprise that their freight rates are lower. We'll go to the oil tanker matrix to validate that. I suspected this was happening, but I've never seen the data, and I didn't want to go to all that work to do it myself. So this is great. Someone else has done the work for us, and it just proves the point. So we do need to think more about the age of the fleets going forward. So that's really good. Okay, here's an interesting slide. I don't know how real this is. If any of you shipping guys are watching this, if you can leave some comments down below whether you agree with this, that the asset prices of the ships are more important than the freight rates. I find that hard to believe, but they're suggesting that the prices at the end of January 21 are now creeping up. And they're suggesting that these have a higher correlation to the stock price. And they're saying the correlation is 85%. Now they're saying 85% correlation versus freight rates, which they're saying are only 56%. So that's a big difference. Correlation of 85%. They're really telling us that it's the ship values that really drive the stock price. Now, I'm not convinced, because we know certain stocks like Scorpio, their stock is trading at like a quarter of its book value or its net asset value based upon what the ships are worth. So there's a few of them that are trading way below net asset value. And if that's the case, then you can't tell me that the ship price is driving the stock price, because it looks to me like there's no correlation at all. So anyway, that's an interesting slide. So let's hop over to the tanker matrix. Okay, here it is. This is the latest update for the oil tanker matrix. I know you guys have been waiting a month for this, so I got it updated for the 4 recent earnings release. We still have another 4 to go, but I want to give you an update of where we're at. The rates I've updated to reflect what Scorpio is saying the rates are, because the rates that we're seeing off of Twitter are suggesting that they're 0 or negative, and those are just not the rates we're seeing each quarter. So something's happened with the rates that are being published. They're just not reliable anymore. So I'm kind of guessing on these. You can see where they were. You can see where I'm suggesting they are now. So they're bad, but they're not as bad as some people are suggesting. And we're going to take a look at the rates to see what was actually forecasted and what was booked, because I've got it all here for you. There's a lot of data to take in. I'm going to guide you through what's happened with EURN and DHT. And then, of course, Scorpio just came in as well. I'm going to do a separate video on Scorpio, but I'm just going to show you where we're at the moment. Look here. For the quarter, Scorpio is actually the top performer for the last 3 months. The top performing stock from 1 year ago is DHT. And then again, that's our top pick, DHT. This is the one in the sweet spot where we think they should outperform because they get a slightly higher rate on the VLCCs versus the Suezmax. EURN should be right up there, but because of the Suezmaxes, we worry about EURN. The results have proven that to be the case. On the earnings on February 4th, EURN ended up losing 29 cents. Scorpio on February 18th ended up losing $1.41. Ardmore lost 59 cents. And DHT, the one that Fidelity has taken a 10% equity stake in, actually made a profit. Is that crazy? That's crazy. But so the stock that we thought should outperform actually did. Now we need to look at a few things to try to understand what happened there, but these are the stocks that are coming in next. TK Tankers, Frontline, NAT. They're coming in, and then DSSI will coming in March. Those are the three we're watching for next. But so far, DHT is the only one who's made money. Let's try to understand where EURN, DHT, and Scorpio kind of fit in there in terms of freight rates that they've booked. So Q3 rates booked. EURN booked 60K rates for half, and DHT had done 51K at 61%, and then Scorpio was in there at 22 and 15. So that's what they told us they had done, and this is what they actually did in Q3. Now then we're going to talk about Q4 and then Q1 forecast, okay? I just want us to go through Q3 just one more time real quick to understand, like, can we trust them in terms of what they tell us? So EURN said 60K and 36. They came in at 42 and 23. That's significantly lower than their forecast. DHT was 51, came in at 48. And look at that. 48 beat EURN, and Frontline came in at 49. So they also came in about the same, although they had suggested they had booked 61K. And then Scorpio was talking around 22. And then Scorpio, they didn't even break it down for us. They just said 15K across the board. So then let's look at Q4 rates. Q4 just finished. EURN said they do 22, and they then broke it out. They said spot versus time charter for some reason. So the spot came in at 20 and then 44. So they're making it a little bit harder to understand what they promised us and what they delivered. For the Suezmax, they're saying 12 and 29. DHT said 38, came in around 34. Scorpio said 18, 12, and then they actually broke it down for us this time. They were pretty close. Okay, so that's what we know about those guys that have quoted their actuals for Q4. So what's interesting is that EURN, because they have so many of those Suezmaxes, I think that probably dragged them down. And then, of course, Scorpio at 16, 12, and 10, there's no way they're going to make money in there, right? So let's go back up again. Let's just double check. Scorpio lost $1.41. EURN lost 29 cents, and then DHT made 4 cents, okay? So DHT is the only one making money in Q4 so far, a rate of 33.8. They can make money. EURN cannot make money. Scorpio cannot make money. So what are we looking at in Q1 for the 3 or 4 companies that have already reported? What we know is that EURN is saying 16K versus the 20 to 44K. And then look at DHT, 34.7 for 77% for Q1. These guys are the boss. Can you believe it? They're actually getting a higher rate in Q1 versus Q4. And then this is what we're seeing for the Suezmax for EURN. It's actually lower than Q4. So that doesn't look good. And then when we look at Scorpio, slightly lower rates, and they lost money with these rates. And then look at Ardmore, 15, and now they're looking at 11. So if they're losing money at a higher rate, then they're going to lose more money. DHT is actually booking a higher rate than before, which means they'll make money again. So DHT seems to be the strongest tanker stock for the moment. Now I've updated all the broker recommendations. So what's interesting is quite a few of them are neutral on DHT, even though they're the only ones that made a profit. And there's still quite a few bullish on EURN. That's kind of interesting. And then Scorpio has one sell and a couple buys, and they're losing money. So it's interesting to see, will the stocks be driven by the freight rates being down, or will investors start to look at the value of the tanker ships themselves? Perhaps if the price of steel goes up and the scrap value goes up because of the price of commodities. So that's what we got so far today with the oil tanker matrix. I hope you find this useful. So good luck.
Okay, so that's all we have for today. So we covered the comments, we covered EURNav's quarterly report, and then we've gone through the oil tanker matrix. As you can see from what we covered, clearly DHT has been the best performer in terms of high freight rates translating into profit. So that continues to be our top pick. We still have 4 more stocks we're waiting for. We're going to see how they perform before we draw our conclusions on where we think the opportunities lie. So appreciate you leaving any comments. Remember to like the video, share it on Facebook and in your favorite Discord groups. And I look forward to talking to you on the next video. Thanks so much. That's it. We're sailing off from here. Leave questions, comments, feedback down below. Think about subscribing if you want to be a part of our journey on learning how to invest in the market. Thanks.